Okay. Uh, Benjamin, just a clarification. Let me make sure that I have the name right. So it's Benjamin Esantsi, right?
Benjamin Esantsi.
It's Esantsi. Okay.
Yes.
Right. I thought the TSI has that she sound.
Yeah, so that's the Ewe sound.
Okay.
But this fancy sound is Esantsi. TSI is T, not Chi.
Okay. Okay. So Esantsi.
Yes, please.
Okay. So Benjamin
Yes,
Esantsi.
please.
And you are the program manager for Access Ghana with the challenges.
Yes. Yes, please. So with the Challenges Group Ghana, I'm the program manager for Access Africa projects. And
Okay.
I also do a bit of finance as well.
Okay. So Access Africa with the challenges group.
Yes, please.
Okay. Yeah. And you said you do financing. Is it more of a consultancy?
Yeah. So with the finance bit, I do more of consulting in bookkeeping and management accounting. Yes, but with challenges as well, I have other finance.
You said with challenges Ghana, you also have.
Yeah, I do also perform certain finance functions.
Okay.
Yeah.
Okay, good. Yeah, I don't want to spend a lot of time on the introduction, just to give
Yes.
us
Yes.
more time to deliberate on the topic
Very
for the day. Mm-hmm. How is Dorcas doing?
Dorcas is fine. I spoke with her this morning, and I think she's getting better now. But unfortunately, she might not be able to join us.
Okay. Well, please give very best wishes to her.
All right. I will.
I think I hear background sound. I'm not sure who that is coming from. Sarah, is it coming from you?
I think it's coming from one of our participants, so I will just mute everybody for now so that we can avoid any background noise.
Okay.
Hi, Kwame.
Hi, Chinwe. Good
Good
morning.
morning. How are you?
I'm doing well. What about you?
Good. Doing well. Are we waiting for some of the other entrepreneurs to join?
Yeah, I was just waiting for one more minute and then we can go ahead and start.
Okay. Benjamin, how's Dorcas? I heard Kwame asking you earlier.
Hi, Chinwe. Yes, Dorcas is fine. She's getting better. I spoke to her this morning, but she's not going to join us, unfortunately.
Okay. No problem. Thank you again for doing this. We really appreciate it.
Motion.
So Kwame, you go ahead and make the introduction once we start, right?
Yes, yeah, I will do that, and then I will let you facilitate the discussion afterwards.
All right, good.
Okay. Okay.
To copy this caller tune at 20.
Okay, so I think we'll go ahead and start. Good morning to those on the US side, and good afternoon to those in Tanzania and in Ghana. My name is Kwame Yeboah, and I'm one of the co-PIs for the Young Innovators in Entrepreneurship, Leadership Development project. And I would want to use the opportunity to thank you all for making time to join us for our Yield Shop series. And this is the fourth in a series which will be focusing on financial management tips for agribusinesses. As we had indicated earlier on, this Yield Shop series is part of our capacity building, is a capacity building component of the project that we are running. And it is aimed at, first of all, addressing the informational needs of the agripreneurs in the project, as well as providing a platform for shared learning among entrepreneurs, because we do believe that being an entrepreneur could be sometimes a very lonely experience, and having these shared platforms is always important. I'll be facilitating this with my colleague, Dr. Chinwe Efion, who will be facilitating the discussion today. Today, we are very pleased to be joined by a renowned speaker who will be facilitating the webinar in the person of Mr. Benjamin Esantsi. He is the director, the program manager for Access Africa of the Challenges Group, Ghana. And he also doubles as a financial consultant in bookkeeping and accounting. And we are privileged to have him speak to us about financial management for agri-businesses. So without much ado, I don't want to waste too much of your time. I will turn the microphone to my brother, Benjamin Esantsi, to lead us. He will give you more details about his. He will give you more details about his background during his presentation. So Ben, thank you very much, and please go ahead.
Hi, Kwame. Thank you so much, and hi everyone. Thanks for having me. Kwame has said it all. I don't know what to add again, but it's been a wonderful journey in the field of entrepreneurship, and then as well as having experiences in accounting and finance, and also joining challenges as a volunteer, working on projects. And that's how come I gathered experience in the fields of agribusiness as well, because we actually used to work with other associations and small, medium scale enterprises in Kumasi, and specifically with the poultry business, and then other businesses as well. Today is basically on financial management tips, but I always say that financial management is very critical. It's one of the most important things that as an agripreneur entrepreneur and as a business owner you should have. Without financial management, you might not thrive well in your business. You might think you are so good in your core operations, but at the end of the day, if you don't take critical look at your finances, you might end up starting all over again. I will zoom into our learning objectives for today, which is basically on being able to know the basics of financial management and also have practical bookkeeping strategies. What are some of the strategies that as an agripreneur you should have? And then what are some of these online accounting and finance tools? And what are some of these benefits that you would have? Most importantly, you need to also know something on internal control in managing finances for the business. What are some of the controls that you need to put in place so that you'll be able to monitor certain operations in the business? And also, we would have a look at the financial statement. What is a balance sheet? What a profit and loss account is? And then what could be their limitations? Because as business owners, you should have an oversight of all the operations in the business. You should understand your financial statement. You should understand the figures. The figures should actually speak to you and also inform you on what steps you need to take for the business. And we'll zoom into financial ratios as basic key performance indicators for the business. So if you are able to calculate one or two of these ratios, this would help you to actually make informed decisions for the business. So in my introduction, we've already spoken about how financial management is very, very critical. It's so important in our businesses, but you still need to understand that you have to actually plan and then also organize and control and monitor certain financial resources in order to achieve some of these objectives of the business. And one of the objectives or the main principle of you being an agribusiness owner is for you to make profit. No one goes into the business with any other motive, even though some people go into businesses for the societal benefit. But at the end of the day, they come out and say, yes, it's been a profitable journey, or no, it's been so challenging, but I feel this is worth it. And at the end of the day, you should be able to arrive at something. You should be able to place value on whatever you decided to do. Now, you also need to be able to understand that with regards to financial management, there are a lot of stakeholders. There are a lot of users of some of this financial information. For example, you have a fruit juice processing or manufacturing company, such as e-juice. And with that, there are a lot of stakeholders. We have internal stakeholders, such as partners or managers, or possibly there could be some form of board of directors for e-juice company. Most importantly, looking at the external users, you might have certain financing groups. You might have certain investors who are so interested in your business. Also, if we look at the public group, government and other regulatory bodies are interested in your business. Why? Because if you also go to GRA, if you also go to SNET, if you also go to other government institutions, they might have some form of effect on your business. So all these people or all these stakeholders are very, very relevant, and we need to also provide them with certain information. What are the basics? I always say this, you need to have certain basics for financial management. You need to have some of these tips for financial management. So I had a scenario back in Kumasi where we visited a poultry farm, and when we got there, the business owner just asked us, are you coming to give me money? That was the first question. Are you coming to give me money to, revamp my business? And we just stood there and then asked there, like, what is actually happening in your business? So what is your financial strategy for the business? Do you have any business plan? Do you have any other strategies that can actually help the business? Do you have a plan for generating some of this income? And also, what is your financial management system? Do you have any records to show us that when we advance certain loans to you, or when we give you any grant, you'll be able to use these monies for whatever purpose that you wanted to use for? What are your current control environment with regards to how you operate in the business? And we went to the farm and we realized that there was nothing on the farm. We didn't have any chickens. The business was not operating. But the first question the enterprise or the business owner asked us was that, are you coming to give me money? We were interested in her business as stakeholders, but at the end of the day, she didn't get anything because we realized she didn't have anything to show us. She didn't have some of these basics. For example, what could be a plan for generating an income? What are some of the marketing strategies that she had actually decided to do that would inform us that if we advance this money to her, or if we are able to help her out, she'll be able to make the necessary revenues that we also wanted. We move straight to bookkeeping. And bookkeeping is very, very important. Bookkeeping basically means how we can record our transactions, or how do we record our transactions in the business. In our agribusiness, be it a poultry business, be it a food processing or manufacturing, be in an aqua production, be it a goat rearing or processing of kebabs or whatever, you still need to maintain thorough records. Mind you, every business has processes, and these processes have some form of cost that you need to be able to actually capture. So for example, with a kebab operation, you might definitely want to go out there to go and get the goat. Now, moving from your end to go and wherever, you would incur transportation. Do you capture the cost of transportation? And when you got to the venue, what happened? Were you able to capture the cost of the goat? Did you take it to the slaughterhouse? How much were you charged for the slaughter of the goat and the dressing? Now, all these processes would definitely come with some form of cost. Have you been able to look at some of these costs? Because they are so relevant in the business. You shouldn't only focus on the sales that you make on a daily basis, but you should be able to understand your processes and the cost associated with some of these processes. Sometimes it is advisable you invest in an accounting software, but I feel in a way, if you don't have the means, if you don't have the financial resources to be able to invest in some of these softwares, you can use an Excel sheet to be able to capture some of this costs and also capture your revenues that are coming in. You also have to be able to record data and run your reports regularly. How often are you able to do this? How often do you sit and then take stock of what has actually gone on in the business? You can do this on a weekly basis or bi-weekly or possibly on a monthly basis. You can sit and just analyze cost and analyze your revenue and see where the business is actually moving to. A lot of business owners, where we had an experience yesterday, we went to one of the markets to sensitize them and then create awareness of bookkeeping and capturing data. And one of the market women just stood up and said, we've been doing this, we've been running this business for the past 20 years. And I mean, we have everything in our head. So is it a new thing for us to now, start capturing data and then also be so disciplined in how we can actually control our costs. If there's anything sensible or anything important to tell us, please tell us, because we might not be able to take whatever advice you are giving us. Now, at the end of the day, we felt this is not supposed to be a one-off procedure. You are supposed to create this awareness possibly on a weekly basis or on a monthly basis to be able to tell some of these owners the reason why it is very, very important to actually capture data or record certain transactions that had occurred in the business. Most importantly, some business owners or some agripreneurs do not keep their personal finances separately from the business. So they always term it as, I'm the owner of the business, or I'm the sole proprietor, and everything is in my head, and I am feeding the business with money. And as a result of that, if I need something, I just dip my hands into the coffers of the business, and then I use it for other things which are not related to the business. It is always advisable that as a business owner, you should be able to keep some of this finances separate. Your personal finances should be separate from that of the business. Possibly, you can open a bank account separately for the business. I know a question could be posed where business owners will always ask, why would I want to open a separate bank account? Because if it's a current account, there's a problem. But I always advise that you can always open a savings account first, and later on start keeping some of this monies or start saving some of this monies from the business into that account. Now with that, as the business grows, you can now move your business from a savings account to a current account. It doesn't necessarily mean you should have a current. The thing is, you should be able to monitor some of this savings or some of the deposits that you do arising out of the business. Most importantly, I always say that we need to always gather the necessary knowledge for our business with respect to finances. So if there are any bookkeeping or accounting workshops such as this, you should always be happy to attend some of this, because as an agripreneur or as a business owner, you should understand the operations. You should understand the figures. You should understand what is actually going on in the business. It is not the duty of only an accountant, or it is not the duty of only the account officer to understand what is going on in the business and then you focusing on your core operations, but you should have an oversight of all the operations in the business. Why do we worry ourselves? Why do we still want to have some of these financial management tips as business owners? I always ask this. Why are we preaching this gospel? Why are we always on entrepreneurs or on business owners to always keep their books? Now, when we keep records, it really helps us to control costs. Because I already made mention of the fact that every business has its processes and procedures, and all these processes and procedures would come with its respective costs. Now, at a point in time, you might realize that a particular process or a particular chain might be too costly. If you are able to record some of this cost, you might realize that on a monthly basis, as you sit down and run your reports, you realize that this particular process has so much high cost. Then as a business owner, you come back to ask yourself questions as to why is this cost moving up so high? Is there any possible options that I can take to be able to reduce some of this cost? So it is very, very important as an agripreneur, as a business owner, to be able to control or to be able to record some of this cost, to be able to ensure that you are on the right path. Most importantly, you are able to comply with laws and regulations. I know that we feel we are a startup, or maybe we are small, medium scale enterprises, and there's no point in registering for tax, and there's no point in also doing other things that would be of benefit to the government. But at the end of the day, I feel as the business grows, you begin to also face a lot of challenges because you never kept records. You would end up falling into the wrong hands because you never kept records. And the tax authorities are always looking for loopholes. They are always looking for places where enterprise owners are faulting, especially with record keeping. And that's how come most of the times a lot of business owners evade tax, because the fundamental thing or the fundamental tip of record keeping has been ignored. Now, sometimes it is very important to keep some of these records because you have an investor coming in who is so interested in your business, but would want some form of evidence to be able to know whether with this food processing industry, or with e-juice, or with the poultry, or with the feeds for the poultry, or whatever it is, it's a viable investment. But with that, the investor might want to see an evidence of record keeping, or an evidence of you being able to actually move from a particular point and getting somewhere with regards to record keeping. Now, you have a lot of people coming in as partners, but these partners would want to know whether you've been able to keep some of these records in the business. How often do you control some of these operations? Most importantly, you are a business and you might want to go in for loans, especially from the banks. And they might need certain record. Sometimes a lot of businesses would want to falsify most of these accounts, go to the banks, and then go for some of these loans. Now, when they go for the loans, the banks are so happy to give you the loans. But at the end of the day, when you do not pay, or when you falter in payment, then it means that they might end up using your collaterals, or they might end up selling your business, or they might end up, you might end up crashing your business. So sometimes it is always important that as a business or as a business owner, you should keep records, because at the end of the day, you were going for a loan, and what happened was that you falsified the account, which means you didn't have records. So with a falsified account, and based on whatever the bank decided, they also said, fine, we think this is a viable investment, this is a viable business, and let's try and then maybe advance a loan to them. And after advancing the loan to you, we realized, no, you were not that kind of business that we wanted to invest in, which means that you might end up collapsing your business. And a very typical case was with the case of Enron, if you've heard that they were painting the business as if everything was moving on well to the public. Meanwhile, there were a lot of things that were not actually going on well. A business that lacks record definitely will be prone to a lot of legal charges. So in the case of Enron, there were a lot of problems that came out. You might lose a lot of sales and profits that without you knowing that you are losing some of these things. Because as a business owner, when money comes in, you might want to use it for something else without using it for whatever purpose the business had been established for. Now, you might have credit-related problems. So we've talked about the banking system where loans were advanced to you and you weren't able to actually pay on time. And as a result of that, your business collapsed. You might miss a lot of opportunities where investors are interested in your business, but they might want evidence of something. But at the end of the day, in the case of our enterprise owner back in Kumasi, who actually didn't get any help from us because there was nothing to show. Now, with accurate bookkeeping, without accurate bookkeeping, you lose the ability to run your business with maximum efficiency. Are you able to run your business with maximum efficiency without records? It's a complete no. because you might not be able to know the right direction of the business. You might not be so focused enough. Because I know as agripreneurs or as business owners, there are a lot of ideas that come. I mean, you go to bed, you sleep, you wake up in the morning, you have a different idea. But what is actually keeping you in focus? What might be keeping you in focus would be some of the records that you keep in the business. You need to be focused. I quite remember I had one entrepreneur who would always meet me and then tell me, like, every morning, like, I think I have this idea. I think I want to branch to this, and when I get money, I can now put it into this business and do that. I realized there were no records in the business, and he didn't really have any focus for the business. So at the end of the day, when he wakes up in the morning, whatever he feels like doing, he just executes it, and that's it. Now I have certain online accounting and finance tools that we can look at as enterprise owners. We have an example as WaveUp. We have the Xero, we have the QuickBooks, and then we have Oze. WaveUp, Xero, QuickBooks, and Oze they actually have similar interfaces, which would actually ensure that you record your sales, which would also ensure that you are able to monitor your creditors or the purchases that you make day in, day out. Also, you'll be able to know whether the business is making profit or loss in real time. And most importantly, you have interfaces where it will show you graphical representation of whether the business is actually dwindling or maybe whether the business is expanding or growing with regards to how you keep your books. So with this, it's technology driven, where you would always have to key in certain transactions. So for example, you incur transportation costs from your business, maybe for other business meetings, or maybe to meet a client or something. You need to actually capture this cost in some of these online tools. Now, what are some of the importance? What do you think would come out as a business you want to actually move into doing something online, or you want to keep records online? What are some of the importance? You are able to create your bills and receipts. So quickly, you have an order being placed for kebabs, or you have an order being placed for juice or vegetables or fertilizers or something. You are able to create an invoice. You are able to create a bill for the client. Possibly, if you're online, you can easily create an invoice and then send it to the client via mail. This makes life very easy. You are able to support clients with financial data and analysis. Most importantly, so for example, you have an investor coming in who is interested in your business, so you want some form of partnership. What would you be able to show? With the online resources, you are able to actually support them with some form of analysis or data to show them that this is how the business started and this is how the business has moved from 0 to, let's say, 100. Now, you are able to understand the breakdown in revenue and expenses. What are some of the revenues and expenses that you incur as a business? You need to be able to understand the processes, as I said, because most of these processes would actually come with cost. Now, reconciliations are made so easy, where you are able to sometimes link your bank account to the online software or the online tool. Now, with this, you are able to monitor in real time what is actually coming in or what you've received in the business, and also what has moved out of the business. Now, with regards to reconciliation, it's basically taking stock, coming back, sitting down on a monthly basis, and taking stock of what has actually gone on in the business. So, for example, you realize there was an anomaly or a discrepancy with regards to cash. Now, a discrepancy of, let's say, 500 cedis. Now, with this discrepancy, if you had an online accounting or finance software, you'll be able to figure out and know that maybe this 500 was a cash that you received from a client other than being banked. So on a monthly basis, you can always request for your bank statement and always check to see whether all the transactions or all deposit that has actually been made has been made. Now, you might end up forgetting maybe a deposit, and this could be an example of a discrepancy. Now, with this discrepancy, you can always ensure that you follow up on some of these things and ensure that all these discrepancies are sorted. So with reconciliations, they are actually made easy. Now, you have access to ready financial statements for use. So for example, you might want to go out for a grant or some form of loan, and the banks or the institution requiring for some of these things would want you to provide them with some form of financial statement. Now, some of these online tools or online softwares would help you to generate financial statements, which can be used as an evidence, to acquire some of these loans or grants.
Ben, let me chime in here quickly. I just want to remind the agripreneurs and those online that please feel free to ask questions, or if you have a comment that you would like to make, for example, you have an experience using any of these financial or online tools, please feel free to chime in. You can alert us by using the question and answer button at the bottom of the screen. And then we will call upon you to give comments. We want this to be as interactive as possible. Thank you.
Very well. Thank you, Kwame. I think, yes, we would want this webinar to be very interactive. And if you have any questions, please do. I move on to internal controls. We need to have some form of internal control in managing our finances. And this is one of the wonderful tips where you need to be able to manage or have some form of control over your finances as an agripreneur. Now, it's always said that cash is key, and cash is very critical in the business. How are you able to monitor cash coming into the business or cash sales? How are you able to monitor receipts and disbursements of cash? How do you pay them? Do you pay them via check? Do you use check? Or do you pay them via cash? How do you deal with your creditors? How do you deal with your debtors? Because ideally, you realize that most of the business or the business profiles that I read, you might end up owing a creditor, or maybe somebody might end up owing you as a debtor. How are you able to manage or control some of these things? Sometimes you need to put in place measures to be able to control some of these things. You might want to give a debtor a 30-day payment period. You might want to give a debtor, let's say, a 15-day payment period. Now, at the end of the day, are you able to follow up on some of these things? Bank reconciliations repeated here. You need to be able to do your reconciliations to know how much money has actually come in and what is the missing gap. If there is any missing gap, you need to be able to fill it. You need to be able to investigate and find out why there are differences. Now, this would always help you to efficiently manage the cash and understand the cash behavior of your business. A lot of us do not understand the behavior of cash. At a point in time where we need cash, that is when we realize that no, the business is not really moving on well. Sometimes we need to understand the behavior of our business, how our business operates. Now, this is a quick one on some effects of transactions on cash. Now, I feel if you know it, you can contribute, but it said that indicates the effect of these transactions of the cash of the company in terms of what will be the effect of transactions on cash. So, for example, you have shareholders pay in 10,000 cedis. What is going to happen to your cash if you have shareholders paying in 10,000 cedis? That You were so lucky you had an investor coming in who wants to be a shareholder and he pays in 10,000. This means that your cash would increase, or your cash position for the business is going to increase. You can use this cash for other things for the business. Now, the second is you buy manuals with check. Now, if you are buying something, you realize that money is moving out of the business. And as a result of that, the effect on cash will be a reduction in cash. You buy tools with check. You're always buying tools, for example, for production, or possibly you always want to buy tools for your kebab, or you want to do something or to process something. You want to buy some of these things with check. Now, buying this with check means that check is bank, definitely. So your bank balances might reduce because you bought these things with check. You buy circuit boards on credit. So I mentioned that maybe you have some form of credit terms with a creditor or with a supplier. So for example, you buy some of these fruits, for example, vegetables, to actually process whatever drinks or whatever thing you want to do. Then you also sell some of these circuits. For example, you sell kebabs to people, and the cost of selling some of these things, you noted them down. But at the end of the day, you sold this for 150. Now, you selling this for 150 should tell you that cash has actually increased by 150 cedis, or 150 pounds, or $150. Now, you might have a computer where you are able to keep some of these online records, or maybe you have an online accounting or finance software, but you needed to service this. Now, you service computers on credit. So you went there, the computer was actually serviced, but you never paid for it. This is something you are owing, which means that it becomes a liability, which we call to the business. It's something that you are here to pay. You know it's a liability. You are obliged to do something. You are owing somebody, even though this is given to you on credit. You buy a van with check. So for example, you have an aqua production company, and for example, tilapia, you need a van to get your operations moving. So with that, you bought a van with check, which is with a bank, of 3,000 pounds. Now with this, you realize that your bank account or your bank balances will definitely reduce. So we are basically looking at the effect of transactions on cash. So there are certain transactions that would have an effect on your cash position in the business. So you should always take a critical look at some of these transactions. As I always stress on the fact that most of these processes will come with cost, and you need to be able to monitor some of these costs. You pay cash for repairs to van, definitely your cash balances will definitely reduce. Then you receive payments for servicing some of these computers. At this point, if you have any questions, you can still ask, but I will move on. We quickly move on to financial statements.
Hi, Benjamin.
Hi, there's a question.
Hi, Benjamin, it's me.
Hi.
It's Chinwe. I'm almost asking on behalf of entrepreneurs, but just thinking in my head as you're talking, what if someone is sitting here thinking, I'm not an accountant, I failed math,
Sorry.
I'm not good
Yes.
with math, I can't handle this information, it's too much, it's overwhelming, and I can't afford to hire a bookkeeper. What advice would you give them?
All right. So that's
with this valuable information that you're sharing.
okay. Thank you, Chinwe. So one of the best approach you can take as an agripreneur, where you are not good in maths, you are not able to actually keep track of some of these things. We have colleagues, we have people we actually started with who are in various disciplines. So for example, you can always rely on colleagues, you can always rely on other experts. Now, these people that you have them, for example, I have my brother who is also an entrepreneur, but He's not really into figures. He's not really into tax laws. He's not really into any other thing. But if he needs an information, he just calls on me and then I provide him with that information. Now with this, I call it a free service. It's a free thing because at the end of the day, you can rely on colleagues or people who are in those disciplines. For example, you have a colleague who is a chartered accountant. You have a colleague who had some form of BSc in applied accounting or maybe BSc in other finance disciplines. Now, with these people, we should always make use of some of these people. They are very, very important. So please, agripreneurs, if you think you haven't established that form of relationship or it's been a long time, you called on those friends, please do, because some of these people can actually help your business grow. They don't really need money, but they might want to see you expand. And they are happy to always tell stories about how they were able to help you. Any other question?
Looks like Fred has a question.
Yes.
Yes, it's a contribution. Can you hear me?
Yes.
We can hear you.
Okay. So I just wanted to add to it. One of the ways to also support us entrepreneurs is getting experts who are, or let's say young graduates who are ready to have job experiences. There are a lot of firms, for example, the firm I'm working with right now, we have fellows trained who are always ready to help businesses grow. So, for example, they are experts in financial management. Some are into marketing. Some are into operations management. We call them business development associates. So these people can be placed in your business for 6 months to help specific area of the business. So, for example, for the financial aspect, that person comes in and help build your financial system. Okay, and this is for maybe a short period, for a temporary period, for 6 months. If that person's work improves your business, what you can do as an entrepreneur is perhaps take that person on hire that person if you want, or let that person work for you for part-time basis. So it gives you some kind of breather. So there are other organizations who have such people that they can a source for the entrepreneurs to help build, to give them some breathing space so that they can concentrate on managing the other business aspects of their businesses. So looking out for such organizations who offer such services also helps. Sometimes it doesn't come at a cost at all, like I'm saying, because most of those organizations are funded to do that, to help businesses. So if you look out for such organizations, you can get such experts to help build your business in that direction. I think that's the only thing I wanted to add.
All right.
And then Benjamin, if I can jump in again, you know, would you emphasize that even if as entrepreneurs can find someone to outsource or to volunteer, that there's some basic knowledge that the entrepreneur, him or herself, should have?
Yes.
Because they wouldn't
Thanks,
even
Chinwe. Yes.
know what to look for in the person. Thank you, Benjamin.
Thank you, Chinwe. So, I mean, you've said it all that, fine, we as agripreneurs or as entrepreneurs or as business owners should always have an oversight on all the operations of the business. Understand some figures, understand what is going, try as much as possible to understand what is going on in the business. You should be able to ask questions, even if you have a consultant working for you for free, to be able to turn things around for your business. You should try and have that mind of asking questions when things are not right, when costs is actually moving up, or when revenues are not coming in. You should ask yourself questions. You should understand some figures. Thanks, Fred. Thanks for your contribution. I think Fred's contribution is also very, very important. And thank you so much for that. So we have another question. Hello, is there an easy way to source for funds? Because most of the process you pass through are very tedious. Thank you for your question. So with sourcing for funds, I feel sometimes a lot of agripreneurs or a lot of business owners waste a lot of time focusing on grants and focusing on free money, as I call it. They waste so much time focusing on some of these things. I always say that the easiest way to do some of these things is you have to start right as an agripreneur or as a business owner. Now, if you have all your records available, it will be so easy for you to actually go for some of these funds or grants from donor agencies, because they might need you to be able to actually present them with some form of evidence of you operating the business. So there's no easy way to be able to, get some of these funds. The only easiest way for you to get some of these funds will be to be able to keep your records. Now, if you keep your records, the secret is any other information they require from you, you are readily available to provide some of this information. Now, the critical thing is, if you don't have some of this information, then it becomes very difficult for you to what? Get some of these funds. Sometimes, I know you ask yourself why this particular business is actually moving on, and I feel like I'm always stagnant and I'm not moving on. The secret to this business is the business has kept records, the business is able to actually track the performance, and at any point in time, when that business is called upon to actually give an account of how the business is faring, they always stand tall. They always stand so high and are able and are so confident to be able to give figures that, okay, we started with 5 million and now we've been able to build to about 10 million. And when we go to the books, you realize that they have some of these figures in there. So I'll quickly move on to financial statements. I always say that financial statements is very, very important. It's very, very critical. You need to understand what is actually going on in the business. You need to know what profit and loss account is. You need to know what balance sheet is. You need to know what cash flow is as an enterprise owner. You need to know some of these basic things where you realize that you are owing so much. You need to ask a free consultant, or you need to ask somebody, or you need to ask an expert, why am I owing so much? What could be the possible causes of my owings? Does that mean I don't pay my creditors? Does that mean I pay them but I don't take records? And they always come back to me, fighting me because they always tell me I am owing them. Is it that I have forgotten? Is it that my sales is not moving up because I feel maybe I am not keeping track of my debtors? At the end of the day, you might have a debtor value of, let's say, 30,000 Ghana cedis, or 30,000 pounds, or $30,000. Now you ask yourself questions. Why have my debtors figure moved so high? People are owing me, but I feel like I have sold a lot of things. Now, at the end of the day, you ask yourself these questions, and you realize that you have not kept some form of records to be able to move to Mr. A and tell Mr. A that you owe me $15,000 or you owe me 15,000 Ghana cedis. Now, at the end of the day, there could be a lot of problems because you failed to understand what was actually going on in your financial statement. Now, it's always useful to a wide range of users. Financial statement is so useful to the government. It's useful to the board of directors. It's so useful to investors. It's also useful to employees as well, because the employees that you actually employ in the business are interested in one component. They're interested in their remuneration. They're interested in how best you can make things attractive for them in the business, for them to also, keep motivated. So our financial statement, we would have an income statement, which we call profit and loss account. We also have something we call statement. We have a question. So what is the best way of buying item? Is it check or cash? Good question. So the best way of buying items will depend on whoever you are dealing with. So it depends, I would say, because sometimes you might want to get something, but at that point in time you do not have cash on you. As a business owner, as an agripreneur, it's always advisable sometimes not to have cash on you, because you might end up or being tempted to purchase a lot of things, or also use these monies for your personal stuffs. So most of the times, business owners will decide not to have money on them anyway, but they have money for, let's say, their TNT and other stuffs. They always have a check book. So as soon as he or she purchases something, might want to give out check for the payment of some goods or for the payment of raw materials. Sometimes too, the nature of transactions will call for cash. Maybe you might need something just at the moment to be able to add up to a raw material to produce something. At that point in time, that is not a realistic time for you to now start writing checks or wasting time to even write checks. At that point in time, maybe you have cash in your till or cash in the business. So with that, you might want to actually give it out and then get a thing. Some businesses or some suppliers or some other companies might not advise, they call it, cash and carry. That if you don't provide me with cash, then it means that I'm not going to give you the goods. So in that sense, you need to also understand a whole lot of things surrounding the nature of transaction or where you are going to buy your items. If you already have a long-standing relationship with that person, fine, you can give the person check. So I'll always say that we wouldn't have a best possible way of buying items. Now, in that sense, you need to also understand your business. So there are a lot of conditions attached to how best an agripreneur can actually have a best way of actually sourcing for items, be it cash or check. So I wouldn't say it's a straitjacket, always use check. And I wouldn't say it's a straitjacket, always use cash. The best thing is look at the various conditions attached to whatever transaction you want to take or whatever thing you want to do. Fred is asking the question that I was late in joining, but crowdfunding can be easy if they believe in your business. But remember not to receive funds for free. Invest it and pay back. Also giving away a percentage shares of to your business also can land you some funds. My views. So with views considered and views taken. Thanks for contributing, Fred. So Fred is saying that crowdfunding can be easy if you believe in your business, but remember not to receive funds for free. Invest it and pay back. So some funds are received for free. And sometimes we have that mind of playing with the funds that we receive. We think it's a free money, and as a result of that, we end up not using it for the purpose or for what the business stood for. So at the end of the day, agripreneurs or entrepreneurs or business owners would go in for a loan from a bank or would go in for some form of grant from somewhere and would use it to buy a personal car, would use it to buy a house, would use it to buy something that does not relate to the business. Now, at the end of the day, it shows that in the first place, you didn't need the money for anything. And most businesses do not need money. The only thing they need is to be able to actually set the processes and the procedures right in their business. For example, you don't need money at the end of the day when you have a lot of goods lying in your warehouse, whilst you have no marketing personnel or no marketing strategy for the business. You have a lot of goods piled in there, but you are still going out and sourcing for loans. Meanwhile, the problem is with your marketing strategy. Now, if you are able to set out your marketing strategy well, then it means that a lot of sales could be made, you receive a lot of cash, and you can still reinvest in the business. Now, Fred said you also need to invest it and what? And try and pay back some of these monies. Now, some monies are for free and you don't need to pay. Some grants also come with some form of what? Concessions or some form of percentages that you need to actually pay to them. This shows that, I mean, when you are able to pay back, it shows that you can be trusted or you have that form of what? Financial integrity to be able to pay back some of these monies. I quickly move on to balance sheet. So the balance sheet will show you. So, I mean, a typical balance sheet or a sample balance sheet. I think at the end of the section, I have a sample balance sheet that we can all have a look at and then possibly try and discuss it. So a balance sheet will basically look and tell you that at a particular point in time, this is what I have in the business. This is what I have in the business. This is what I own as an agripreneur. This is what I actually own. And also looking at the balance sheet, it will tell us how much I owe to other people, which is considered as what? A liability. Now, what I own belongs to me. It might belong to me as a result of something we call your equity stake in the business. What you actually contributed in making the business what it is now. So for example, I don't know why I always use kebab. I don't know whether I like kebab, but I feel, you know, with a kebab, I know you have certain assets for the business. You have some kebab stand or barbecue stands on all those things. So for example, with those things, you have them as an asset. They are assets to the business. So for example, if you move to e-juice or a food processing or a manufacturing company, the fruit mixers and other machines in the business are something that they own. So these things can be considered as what? Assets for the business. So with aqua production, for example, maybe you have a van that would be used to actually distribute some of these things. Now, at the end of the day, the van in there is something that the business owns. It's an asset to the business. For example, maybe you also work as I mean a packaging or maybe a manufacturing company. But at the end of the day, you have an edifice, you have a land, you have a building, and this building belongs to you. And as a result of that, this building can be considered as what? An asset. It's something that you own. Now, what are some of the liabilities or what are some of the things that you can possibly owe somebody? So for example, you went to the slaughterhouse. You went to the slaughterhouse to slaughter the goat. And at the end of the day, when you went, you didn't pay all. You didn't pay for the cost. Or possibly you went to buy the goat, but you didn't pay all. Now, at the end of the day, that you will be owing your supplier, the supplier or the person who supplied you with the goat or the person who supplied you with the raw materials. You will definitely owe this person. And as a result of that, we call this what? An owing or a liability. Now, some of these assets or some of these liabilities, as I always call it, can be considered as what? Some are fixed and some are what? Current. So you should be able to know as an agripreneur or as a business owner or as an entrepreneur, you should be able to know what things in the business are current. So for example, if on top of my head, I realize that I have a building. Building is an asset to the business. But I realize that you have to ask yourself, is this building a fixed building or a fixed asset or a current asset? The reason why we call it current is that these things or these transactions can actually be consumed within, it should be consumed within what? 12 months, or that's one accounting period. So if you have any other transaction which is moving beyond 1 year or 12 months, then you can classify it as what? A fixed item. So for example, I'll use the building. The building is considered as what? A fixed item in the business because this building has been there for even more than 12 years. Or this building has been there for more than 3 years. Now, I'll also use the van as what? A fixed asset. I use the van as a fixed asset because this van has been there for more than 2-3 years and I've been using for my business operations. So for example, the kebab stand, I'll call it a fixed asset because if I've used this kebab stand for more than 12 accounting periods. So with that, I classify it as what? A fixed asset. Now, I move on to current owings or current liabilities or non-current liabilities. So it's still in the same line as how I explained for the asset, which is fixed, which is if it's current, then it means that the amount you are owing the creditor or the person you want to buy the good from, it shouldn't what? It's not going to exceed 12 months. Now with this, if it's not going to exceed 12 months, it's a current owing or it's a current liability. And this can be executed within 12 months. Now, if there's something going to take more than 12 months, for example, a loan was actually advanced to you by a bank. Now, and the period or the tenor of payment is going to take 3 or 4 years or 5 years. This is considered as what? A long-term what? Loan for the business. So in other words, we don't call it a current liability or a current owing. We call it what? A long-term what? Owing. So balance sheets can indicate if a company has what? Excessive liabilities. That is why it's always important as an agripreneur or as a business owner to be able to understand the figures or to be able to understand what is actually going on in your business. Now, it can also help you to predict future balance what? Bankruptcy. So with that, we realize that in the case of Enron, as I used, it doesn't actually relate to your business, but anything can actually happen. A lot of financial falsifications are being done, as I call it, in the balance sheet. And you need to ask yourself questions because it's always considered that there are things we call off-balance sheet accounting. So sometimes you might want to push in some things in the balance sheet. But if you are able to inform yourself or you are able to ask yourself questions on figures in the balance sheet, it will help you so much. It will be able to help you. Why am I having a lot of liabilities? Meanwhile, I feel that I have paid everything off. Then you can now begin to what? Investigate and find out why your liabilities have gone high. Sometimes your assets might go high, but at the end of the day, you need to ask yourself, I feel like the value of the assets that I have in the business is not amounting to this amount that I have. Then you can now go and drill down and find out or investigate why your assets are going up or are even reducing. We'll quickly move on to understanding the elements of the balance sheet. So we are classifying some of this under current or fixed assets. So based on what we have freehold and leasehold land, which we know definitely will be classified under what? Fixed assets. We have investments. So it depends on the type of investment, but mostly investments are, the tenor of investment might take like 2, 3, 4 years. So definitely we might want to place some of these things under what? Fixed assets. You have buildings, which we've already talked about. You have plants and machinery. So we have one question. Yes, Fred.
Yes. The name is what? Benjamin.
Yes.
You know, entrepreneurs, we are fond of starting from our houses or from our small corners. Yeah.
Yes.
And if I use myself as an example, when I started, I had a pickup before I even started my business. So if I'm putting my balance sheet, you see, I'll put a pickup there. But you see, it is personal. The company did not buy the pickup.
Yes.
You get what I mean? So maybe it's a question, but then it's also a contribution. We should be careful to differentiate between our personal assets that we are bringing into the business. And then we classify them as the business assets. I think there should be a clear distinction because it is easy for us to say that our personal belongings or our personal things that we had before we started the business are captured on our asset items on the balance sheet. And that sometimes is problematic.
All right.
Or how, yeah,
Yes.
separating personal.
Thank you so much, Fred.
Yeah.
Yeah. So I mean, what Fred is saying is very practical, as he has a van that he started with a business, and at the end of the day, we need to be able to separate some of this our personal stuffs from the business. Even though this is considered in the balance sheet, we have actually captured it in the balance sheet. At the end of the day, the business is owing Fred. You know, he is a separate entity. He's an individual on its own. So in this case, on the balance sheet, you know, it's always said that the accounting principle, which I forgot to tell you, is that whatever you do to the left, you need to do to the what? To the right. So at the end of the day, you give out a van worth 12,000 or 20,000 Ghana cedis or $20,000. And this has actually been captured in the balance sheet. Now, this is considered as an asset to the business. And it's been given by what? Fred. Now, at the end of the day, Fred is not going to give this for free. It is not for free. Fred is trying to help the business. Now, with this, the other leg, where is this other leg going? The other leg, which you need to find a way of classifying it, could be like a loan. It's a loan to the business, which is a credit to the business. So in this case, it is very, very important to be able to actually classify some of these things or actually know what it is. Is it for the business or is it an owing? Is it something that needs to be paid back? Because at the end of the day, I know when the business gets to a point, Fred will be able to recoup the costs incurred on some of these things. Thank you so much.
So
we move
Benjamin,
on. Yes.
So Benjamin, to add to that, you see the recent issue in Ghana with Mr. Moabin, who claims he has to sell personal house money at 5 million. Is it Ghana cedis or
Very
dollars?
well.
Aha.
Yes.
So this he claims he was not captured. That it was captured as a business, but it was his personal kind of personal property. So
very well.
We should be very careful to separate our person, because the temptation is that for me, my pickup, okay, if I need money to go somewhere for my social event, I say, Charlie, this is my pickup. The company should give me money to fund to do my own personal thing. But you see, because we are captured it as business, I'm tempted to be spending on it when it's not directly related to the business. It doesn't bring any money to the business. So this distinction, I think for us, should be very clear, because if I start with a knife from the house, my own kitchen knife and all, and I'm capturing, it's a gray area. We should be very honest in doing so, because they affect us in the long run. Like I said, the test case is UT Bank's box. It's a clear test case as some of the things that happens in businesses. And if we start on the right footing as entrepreneurs, even though we are struggling, it helps us from some of these issues.
All right. Thank you so much, Fred. So Fred made a critical point that even though we are struggling, you know, it's not an interesting journey. It's a challenging time. So if you are not able to start right, you might end up having a lot of problems in the future. So you need to start right, be able to distinguish what belongs to the business and what does not belong to the business. So that at the end of the day, when you are giving an account, you'll be able to actually know what to tell people. Yes, Fred.
Benjamin, let me also chime in here, and I think this is a very critical area that I believe we will need to explore a little bit more further. And it was the same. I had the same question. Are there any rules of thumb or best practices on how to do this separation of our personal finances from the business finances? And I think one of the you had mentioned one about keeping a separate bank account. So in addition to keeping a separate bank account, are there any other tips that you can give us concerning this particular issue?
Okay. All right. Thanks, Kwame. So, I'll give you a typical example where at the end of the day, you realize that the business was cash strapped and there was virtually nothing for the business to pay salaries. So with that, you have employees, and at the end of the month, I mean, you are cash strapped. Debtors are not paying you, and all of a sudden, you have the feeling that, oh, I mean, the business is mine, and I'm the business. So then I can just dip my hands in my pocket and use these monies to pay the employees. Now, one point is that if you were to go to the bank for money, they would have given you this thing with interest, and you would have paid this money, principal plus the interest. Now, here lies the case: you are the business owner, and you are paying salaries with your personal money. Now, these things, in a way, we should actually treat it as a separate business. You should treat yourself as a bank. An example, as a bank, giving out money to a client or giving out money to a business. You should be able to classify some of these things. So, for example, it's something that you are giving out. You are a creditor to the business. You are crediting some amount of money, which is, for example, $5,000 for the payment of salaries. At the end of the day, you are expecting some funds to flow in by way of you debtors paying you or something like that. Now, at the end of the day, you need to be able to distinguish and know the expense that you've actually incurred and how much the business is owing you. And at the end of the day, when funds come in, you need to be able to what? Take how much you have given the business. Possibly, you can say, okay, fine. The amount that I've given to the business, I'll classify it as what? A capital to the business. That's another way. I will classify this as a capital to the business, or I'm giving this money as capital, or I'm trying to inject money into the business. And that should be classified as such, that is capital. But you know, in other subcategories, you know that definitely this 5,000 that I advanced to the business was some form of what? Capital. So you should be able to distinguish some of these things and clearly state, even though you know you are contributing to the business, it's some form of what? Capital to the business. At the end of the day, a director's, possibly you can classify it as what? A director's loan account or something, and push in some of these monies in there. Now, don't forget that you are an individual and you might be in need of something. And at that point in time, the business might have grown so much, or might have expanded. And there's so much money and there's everything moving on. But you have forgotten you lent the money, you lend the business some form of money, which you can actually rely on in terms of what? Of need. So you should be able to classify some of this. So for example, first of all, we have a question. So, hello, please clarify this for me. I'm a business owner. However, my knowledge in this balance sheet issue is quite low. What is the way forward for a young business? Should I employ a professional accountant? So, yes. So, Isaac, that is a good question. Your knowledge in the balance sheet issue is quite low, and it's good you are actually getting some of this understanding. I mean, and it's a good thing. But you need to be able to, first of all, understand yourself or understand your position now. Your position is your issue with balance sheet is critically or however low. But now ask yourself, do you have the funds to employ a professional accountant? If you have, yes, then it's a good thing. But at the end of the day, you need to also be able to find a way to also understand some of these transactions. I always stress on that. You need to be able to understand it. We don't expect you to have a full course or a full-blown course on subject areas such as this, but you should be able to understand the basics, what an asset is, what a liability is, what is your equity stake in the business, what is the capital you've actually contributed in the business. So you need to understand some of these basic elements. But I mean, aside that, if you feel you have the financial resources or you have the funds, I mean, it's a go ahead. You can get a professional accountant or you can get an expert to help you out with some of these things. But I always want to stress on the fact that you need to understand your business. Because, I mean, you are a business owner. I don't know what you deal in, but you should be able to understand what is actually going on in the business, have a fair idea of what is going on. But if you think you have the funds, why not? It's a good thing. You can get a professional accountant to be able to get things right for you. And as Fred was saying, you can also get some of these organizations that organize some of these things, they have junior consultants. So for example, Challenges Group Ghana also has something similar like that, where you have junior consultants coming into your business to turn things around in terms of finances, marketing, and other areas of the business. So with that, you need to actually look at your position first, Isaac. Are you able to pay? If you are able to pay, fine, you can go ahead, but you still need the basic knowledge. You still need the basic knowledge. So I would zoom into, yes, so Fred wants to ask something.
Yeah, I want to contribute. I want to Benjamin.
Yes.
I realized you are struggling to tell him no, not to hire a professional accountant at this particular stage. Just say it as it is. It is more beneficial. You know, those I would say that yes, it's good. But then at the stage of the business, first year, second year, third year, maybe not. You don't have to. Quarterly, yes, maybe you can get somebody to come and look at it generally to give you a first-hand audited financials as it is. But then to have a full-time person to do this, it will end up draining your money unless it is for free. And I don't say that things should be free because people always expect you to be paid when they work. If not, they might not even give you quality. They might not give you quality work.
Yeah.
So
yeah.
I think the answer is no. Employ other. If you have a good partner, that's why our partnership is very key. You know, business should not be owned by only you. Have a partner. Let him also have some 5% share or 3% share because you know what you are going to get from that person. You know, so that you all support each other's weaknesses. So I think that's what I'll add to it, Benjamin.
Yeah, so point well noted on that. But I don't know whether you might also know the stage of the business. If the business, I mean, the question was actually an open-ended one where you need to get a lot of contributions from other. So that side of that is also a contribution coming from you, and it's well noted. But I feel some businesses will just start from the scratch and have some of these processes or some of these functions set in place. Definitely. So I don't know if still your business or the business is capable, the business has that financial resource, is ready. I mean, no matter what, is ready to get a professional accountant. Why not? And as Fred said, it is true. You can actually get these people on a quarterly basis or possibly half year or something for these people to just come in and see whether things are right in the business. That one can also be considered as an option. But tell you what, if I have the resources and I know my functions or my processes are working, definitely, it's better I just get a full-blown accountant to start things right for me. Yes, so I will move on to the profit and loss account quickly. Yeah, so definitely, you know, the profit is telling us something about the performance of the business. It's telling us, how have I fared? It's asking, how did I fare in the business for the period that I have been in business in terms of what revenue has actually come in and also what are my expenses? Are my expenses moving too high? And at the end of the day, you know that when you have your revenues and then you take off your expenses from your revenue, you arrive at something for the business. And I know at this point in time, I don't know at this stage of your businesses, I don't know whether some of you businesses do contribute to some form of tax. I know at this point in time, a lot of you might say, no, I don't even know what you are talking about. I don't know whether I even pay tax or not. But at this point in time, you need to be able to know some form of contributions of tax that you do. I know in Ghana, we have a company tax of 25%, which is after your profit. So I don't know whether in other jurisdictions, there are other profits that, and I also know that the GRA is also giving some form of tax holidays to young entrepreneurs between the ages of up to 35 years or so. So I don't know whether that one is also rigorously administered. Now, aside that, you need to be able to what? Know the basic things as revenue, expenses, and then what? Your net profit. What are your revenue streams? Now, the main revenue streams that you have as an enterprise, for example, I know for example, I'm using the kebab again. I'm using the kebab. I don't know why I'm using the kebab again. But for example, you have the goat rearing, you produce, you process, and all those things, and then you also sell kebab. Now, you also have to understand the business process. You need to understand your business model. Now, with your business model, you realize that it is not only one revenue stream. You have other streams of revenue. Because I know, for example, in aqua production, you do some form of development and then some other training. Now, with that, do you earn some form of revenue from those streams? Now, with that, you should be able to capture all these things in your business model. That, okay, fine. If my core business model is with aqua production, what are the other areas that I can actually get money from? You need to be able to know those revenue streams. Now, out of that, you need to be able to know what are the expenses that I'm going to incur. That is why I still come back to the processes again, because at the end of the day, it will inform us of the cost that we actually incur in the business. Then we arrive at what? Our net profit. So it helps us to evaluate the past performance of the business and provides a basis for us to predict future performance. That is why it's also important to sometimes, as a business owner, as an agripreneur, have some form of budget in the business. You need to budget. You need to ask yourself, at this point in time, I am starting, but I believe in the next year or two, I want to get an asset base of 3,000. Now, if you want to get an asset base of 3,000, what am I going to do to get that asset base of 3,000? So you have actually budgeted that you want an asset base of 3,000. Now, at the end of 2-3 years, you realize that your asset base was around 2,000, but your actual budget, your budget was 3,000, but actually you arrived at 2,000. This will help you to also investigate and find out why you didn't get to that target. So it is very important as a business owner to be able to budget for yourself, or budget for the business. Where do you want to see this company get into? Where do I want to see e-juice moving into?
Hi, Benjamin.
Now, it also helps. Hi, Chinwe.
I'm so sorry to stop you mid-sentence. I just wanted to do some timekeeping. We're about 3 minutes till 10. And I wanted to get a sense from the entrepreneurs, how many of them are willing to stay on a bit longer so that you can wrap up. I know we've tried to commit to an hour and a half so that they can continue, but I don't know if you want to wrap up the summary and maybe keep some minutes for questions for those who still want to stay on. And Sarah, we can do a quick poll to see how many people are able to stay on.
Okay, I will set up a poll if everyone could just vote and let us know if you're able to stay.
Okay, so Sarah has sent a poll already. Benjamin, please, meanwhile, you can continue. Sorry again to interrupt you.
Yeah, so I think we could do maximum another 15 minutes to wrap up. Yeah.
Okay, all right. Thanks, Kwame. So, yeah, so Fred wants to leave. Fred, thanks for your contribution. We really enjoyed your section as well. Thank you so much. Moving on, yes.
And Benjamin, let me also say this, that for those that will also be leaving, the recording is going to be available on our website, so they will be able to watch it later on at their convenience.
Okay, all right. Thanks, Kwame. Yeah, so moving on with the profit and loss account, this will help you to actually assess okay. All right. Yeah. So Fred is still staying on for us. Thank you so much. And we have, we need to understand the risk of the business. Okay. You need to be able to understand the cash flows, because you spend money, okay, in procuring certain what assets or procuring other things for the business. So the profit and loss account will give you an overview of the performance of the business. If you think the business is not doing well, now at the end of the day, on your first year of operation, you had a loss. This doesn't mean the business is not doing well. I remember some years back, one of the banks here, Guarantee Trust Bank, made consistent losses for about 5 years. This didn't mean the business was not doing well or the banking situation was so worse, but in the 6th year, they made a profit. So one advice is, as agripreneurs or as business owners, you shouldn't be expecting quick profits for the first year of operations or in the first year of operations that I am getting some form of, I'm expecting profit. So we are eager to what? To make that profit or hit that target, and then we keep relaxing. You need to be able to keep yourself motivated that in the first year of operation, there was a loss. Okay, my performance was a loss, but I feel I need to put in more effort to be able to get things done. Now, with that, you are now informing yourself that, you have some form of what? That is the model. That you have a target. That you have a strategy. That, okay, make a profit all the time. You should be able to what? Stand tall when sometimes you make losses. Now, I move on quickly to ratios and other key performance indicators. I just selected some of these things that which would actually help us. That, for example, you can do variance analysis. Now, when I say variance analysis, it tells us, it gives us an indication of looking at certain plausible relations on as this month. For example, you incurred a total expense of what? 6,000. Now, in the month of August, which is actually ending, you are realizing that your expenses actually gone up to what? 800. Now, you have a variance of what? 200 cedis. Now, with the variance of 200 cedis or $200, you need to be able to investigate and find out why. Some of these investigations could actually be at the point where maybe if your sales, your expenses are, is pegged to the exchange rate and all those things, you might have some form of exchange rate variations and other things in there. Or possibly with high rate of inflation could actually affect some of these things. Now, with variance analysis, it tells you or gives you some form of what? Indication that, okay, it's better I reduce my cost, or maybe search for other avenues or other options or other suppliers to be able to deal with. So, for example, maybe you might realize that your long-standing supplier is actually charging you too high. So what do? You take a decision of what? Changing that supplier, or maybe try and mix up the supplier with another supplier. So this variance analysis helps you in so many ways, which you can do it on a monthly basis. You can do it on a yearly basis. More or less like every quarter, you can do this as well. Then we move on to ratio analysis. Ratio analysis is also another form of KPI, key performance indicators. Under ratio analysis, you can do net profit margin, you can do return on capital employed, you can do return on assets, and you can do what? Working capital. So I'll explain briefly what these things are. So your net profit margin is basically telling us that what is the margin of your profit for the business. Basically, it is telling us the performance of the business. That, oh, okay, at the end of the month, I realized that I had a net profit margin of 10%, which means that the business is what? Is growing, is doing well. Return on capital employed. It basically tells us that the capital that we have employed in the business, is it giving us the needed return, or is it providing or giving us what we needed to get in the business? So basically, after getting your capital employed, which I know someone might ask, what is capital employed? Now, we always say that capital employed is telling us that we need to be able to actually come out with our what? Total assets. What is our total assets in the business? You need to be able to know what your total assets in the business is. And you need to be able to know what your current liabilities are for the business. Then you can now get what? Your capital what? Employed. Return on asset is basically asking us, what is the return for pushing in some of these assets in the business? What is the return? What do you get out of all these assets that you have in the business? Are they assets working for you? Are you getting the required returns from the assets that you have in the business? Working capital. Working capital is basically telling us that what amount of money do you have to take care of what? Your day-to-day transactions, your day-to-day activities. That is your working. It's come from the word working. So working capital. And somebody might ask, how then do we arrive at our working capital? We arrive at our working capital by ensuring that we need to know what our current liabilities or current assets are. And then with that, we know that we need to take out our current liabilities from our current assets, which I know we've already explained some of these things. Now, I quickly have a sample financial statement, which I have here, calculating financial ratios. So we have a sample income statement, which is our profit and loss for the period. We have the revenue stream. So we have sales from business, which is 10,000 cedis. So I know the main revenue stream for aqua production is the 10,000. So the other incomes could come from maybe business development or development and training services that they actually provide. Aside that, there are other incomes. Sometimes, one thing that we also forget is with our bank statements. Sometimes the banks do dash out some credits. They give us some interest accrued or interest, something like a credit interest. Some of these things are considered as what? Other incomes to the business. If you open an account for the business, it's a savings account. Definitely, a credit interest will accrue to the business. All these other incomes can be considered in this form. Then you arrive at your total revenue. Now, what are your various expenses? You pay suppliers, you purchase something, also interest on loan. Maybe a loan was advanced to you, and then you need to also service some of these loans you need to pay on a monthly basis. Definitely, one of the most important things that I always say is what? Your wages and salaries. You need to take care of your employees. They are not free, or they don't work. They are not working for free. You need to also try as much as possible to invest in some of these people, because this would inform them whether they need to stay or they need to move on. So you need to be able to pay. And also, please pay yourself. You need to pay yourself as an agripreneur or as a business owner. Pay yourself on a monthly basis so that you wouldn't be eating from the business. Now, some form of depreciation to also take care of the wear and tear of the kebab stand or the barbecue stand, the wear and tear of the car, the vehicle that you have, the wear and tear of the fruit mixing machines that you have in the business. So depreciation, you need to be able to take care of some of these things. Now, especially with, I move on to the vegetables and the food processing people. You incur some form of FDA certification. Sometimes you need to get certifications from FDA. All these things are expenses that you incur on the other side. You need to capture some of these things in the income statement or profit and loss. Sometimes you do pay some form of taxes, and you need to also include some of these things in there. Now you arrive at your net profit, and with your net profit, this net profit is what you have for the business. Now, for example, if it's a partnership, as Fred was saying, you need partners. So at the end of the day, you arrived at a net profit of 6,000. Please don't think the 6,000 belongs to only you. Maybe you have other partners that you need to, based on some proportions or some other proportionate calculations, you have maybe 10% stake or you have 20% stake. Sometimes partners would always want to plow back some of this profit in the business because they feel the business is a year old. The business is not so strong enough to be able to actually fend for itself. But at the end of the day, they might want to plow back some of this profit in the business. Then we move on to the balance sheet. We've talked about the assets. We've talked about the current assets. We've talked about the current liabilities. So we have a full-blown sample balance sheet, which is fixed assets. We have equipment. We've talked about it. We have land and building, which is fixed in the business, and it's going to last for more than one financial period. Then you have current assets. These are assets that you can easily execute or finish up within one financial period. We have cash and bank. We have account receivable. So account receivable is talking about what? Debtors. So debtors, you owe them, but you know, debtors, you don't expect them to. Sometimes, you know, you have people who are so stubborn, or you have debtors who are so stubborn that you keep on chasing them for almost like a year and they are not even paying. But I mean, in rare cases, you might have people who pay within 12 months. So those people can be classified as what? Assets. Now, you have some stock inventory, which is also considered as what? Stock of items. I know all our agri-businesses have some form of stocks. And definitely with this stock, I don't know whether per my experience, maybe I've not met any client who has some stock for more than, how do we call it? One accounting period. Definitely, you know, some of these things are perishable. And as a result of that, you have some amount of stock in there. Then we move on to your equity, which is your stated capital. When you registered a business, you started a business with an amount of capital, which is seen as stated capital. Then you have your net profit. You see, you have some form of connection here. The net profit that you had in the profit and loss account is what has actually been brought here to arrive at what? Your total equity stake. Then you move on to your current liabilities, which we've explained. You have your creditors. You have some form of accrued interest for the long-term period. And then you have your long-term liabilities, which is the loans that was actually advanced to you, about 20,000. So with that, it's always said that your assets should always be equal to what? Your liabilities. So we have a total asset of 35,000, and you also have a total liability of what? 35,000. Now, I think this a take home. You can, I mean, as you are home, you can try and then calculate some of these things based on the ratios that I have actually given. You can calculate your net profit margin, which is your net profit all over your sales or your revenue that you've incurred for the you've actually earned for the period times 100. So you can try some of these things for one time. I move on quickly to one of the online. We have a lot of them. We have QuickBooks. We have QuickBooks. We have WaveUp. We have Zero, and they all have some form of similarities. And as a result of that, I think as a business owner, whichever one you are comfortable with, you can please read around, find out if you need more assistance. We can actually help you with that as well. At this point in time, I would want to say a very big thank you to all of you for your questions and for your contribution. It's just been an interactive section with all of you. And I think at the end of the day, the most important thing is you taking some of these tips very seriously. And then with that, we are good to go. I believe your enterprises will also grow. And then in the next 3-4 years, we will also hear of some of you. Thank you so much. Thank you, team. Yeah.
Benjamin, thank you very much for those insightful presentation. And I want to thank everyone for making time to join us. We have 3 more minutes to wrap up. So I think I will ask if anyone has a quick question that you would like to ask Benjamin before I close out. Before we close out, any quick question or any contribution before we close out?
While people are thinking, I just want to add my thank you also to Benjamin. This was very, very, very well presented and articulated. And I have a lot of takeaways myself, and I'll just share a few. One, recognizing that you are in business to make profit. You need to take stock of your costs, both the obvious and not so obvious ones. When you said something about entrepreneurs, especially in Africa, saying, I have everything in my head. That was so true and so appropriate. I've heard that so many times. So the importance of documentation, of tracking, of keeping records. Also saying, I've invested so much, so I have a right to take it back out. These are really, really valuable nuggets of information that even if we don't know all the balance sheets and the assets and liabilities and those things take more exposure to learn, but these are some basic principles that we can leave with and start practicing almost immediately. So thank you very much, Benjamin.
Thank you, Chinwe.
Yeah. Philemon, I think I saw your hand up.
Yeah, I want to thank you too for Talita said. I think today I received a lot of information about financial, and I think from tomorrow I will start to implement it. Thank you very much.
Well, thank you for that comment. We appreciate the feedback that has been provided, and we look forward to bringing you more of such engaging and insightful presentation. Benjamin, thank you very much, and thanks also to Challenges Group. And so, by way of housekeeping, our next webinar is going to be on September 26th, which is about a month from now. We will provide you more updates as we get closer to that. But I believe we will be talking about leadership in agri-businesses. Leadership in agri-businesses. At the end of this webinar, we will be sending you a survey, a short survey, just to get your feedback on the webinar that we just completed. We will also be sending you a link that will allow you to access this webinar on our website. So you can go back and watch it at your convenience. And if you also have additional questions, we will be happy to connect you with Benjamin later on to address any questions that you may have. On behalf of the Yield team, I want to thank everyone for their time, and thank you all for making this webinar a success. We look forward to communicating with you again. Thank you very much.
Thank you.